Yeah, hello everyone. Welcome to today's panel. Hope you've had a great time at EFCC so far. For those of you who don't know me, my name is Harry. I work in DeFi at RE7 Capital, and I'll be your moderator for today. Quick show of hands, who here has spoke about RWAs or AI since they've been at Cannes? Just one. There's surely more. Okay, cool. Because that's what today's topic's going to be on today. It's a very exciting topic within the industry at the moment. It's personally a topic I've spent a ton of time thinking about at RE7. I'm sure Rafael, Mykolas, and Alpha is the same. So yeah, without further ado, I'll hand you over to the panelists for a quick introduction, and then we can get into today's talk. Thank you.
Yeah, hi everyone. Rafael from the Partnership Development Team within Franklin Templeton Digital Assets. My main focus is tokenization and how we can bring institution on chain, not to, let's say, make money and attract capital, but let's say to come on chain and find real solution that just improve what they already have, but make it better and more efficient.
Hello, good morning. My name is Mykolas. I'm Lithuanian, but I'm based on the plane, economy class. And I fly from place to place representing Bybit and meeting governments. And the first part of a day, I spend explaining to governments what is crypto. And the other part of a day, I tried explaining to crypto people what is government. And really pleased to be here. I lead the policy team, and I believe that these events add real value to building communities, building ecosystems, and especially what we do at Bybit as well.
Hey, I'm Arthur, Chief Investment Officer at OneAsset. At OneAsset, we are a tokenizing platform, and we are specialized in tokenizing commercial real estate, and we start with the UAE.
That's great. Thank you, guys. Really appreciate that. So I'm sure we got some people in the audience who are maybe doing some DeFi investing or some kind of tokens. So first question for the panel today, where do you feel like smart capital is moving right now? Do you feel like it's infrastructure, AI, or RWAs? And where are you most personally convicted and why?
I can try to take, if I may. So I think we need to look at the global perspective of what is happening, and not just EU, although I'm a European and allowed to complain about Brussels a little bit, not too much, but every day, what I do. And whilst Europe and Brussels is building regulatory sandboxes, US is going straight for the beach. In terms of venture capital investment, 50% of it is placed in US. In terms of money market funds, tokenization, exchange traded funds, stable coins. So what we see in US is really impacting the global markets, and US is driving a significant part of investment, and much of it now is going into tokenization. Even have a look at what's been announced by NASDAQ and New York Stock Exchange recent initiatives with blockchain infrastructure, actually building the basis of the global capital markets. So tokenization is number one, and the US is driving it. The second part is China. Not many people speak about China, but China is actually actively moving into tokenization markets. Central bank-based digital currency that China is building will be used for markets that will be tokenized in Hong Kong. So you'll be able to buy equity stocks in Hong Kong, tokenized market, using to settle the government money. So that's very, very important developments that we see right now where the global markets are going. And then in the middle of that, you have Europe, which is doing the hybrid thing. And in many instances, I believe that it's a big challenge because we don't have private issuers of stable coins to settle the tokenization. We need government money, and that's what the EU is doing. So I believe that tokenization is a very, very important part of it. And this is where the global markets, especially the crypto industry, is going.
That was a great answer. Thank you for that, Mykolas. Rafael, I'd be curious to get your understanding on this topic, given you're doing a ton of RWAs over at FT.
Yeah, within institution, a lot of money is going into infrastructure. The whole point of blockchain is improving what already exists, make it more efficient, and a lot have been done, but also a lot have been too much focused beforehand on the distribution side, how you just improve the distribution. While if you want really to bring institution on chain and bring the smart capital that we are speaking about on-chain, that they're actively looking on-chain, but to bring them, the infrastructure is important. And here I'm thinking about the transfer agent system. I'm thinking about identity. And I'm thinking then also about AI and how we can leverage AI on-chain. So much of that capital is still waiting off-chain and is looking into how they could use the blockchain to access the same asset like tokenized money market fund or money market funds, how blockchain can make them better.
Yep, thank you for that. Just sorry for the audience. Lionel, did you want to do a quick introduction today?
Yeah, hi. Yeah, so I'm Lionel. I'm actually part of Spartan Group. So specifically the investment team in Spartan. Right. So under the broader Spartan Group, we have 3 business arms. The first arm, the investment side, we manage 4 funds, 2 liquid, 2 venture. On the VC side, you can think of us as a crypto investment bank, helping projects in fundraisings, M&As, token launches, that kind of stuff. And lastly, we have a venture studio. Yeah.
That's great, thank you. So this is a question for the full panel, so please take it in turns to answer this one. Do you feel like there's a real match to be had between infra, AI, and RWAs, or do you feel like it's kind of buzzwords that are packaged together?
I think from what we do at Bybit, so basically AI is like electricity. It's not a product in itself, it's something that we use to power the products and the business that we do. And it's at every single layer that you can imagine. So it's internal reporting, internal auditing, internal forecasting, customer service, transaction screening, sanctions monitoring, markets forecasting, AI trading, AI bot trading. Every single layer is basically impacted with AI and what we do. But AI is just a tool to bring the new products, to bring the new business, the new services, and which is extremely important. Traveling at different places, conferences, I've been hearing a lot about original gangsters, crypto gangsters, talking how they'll be disrupting traditional markets and traditional finance like never before. But in reality, many of them are not even at the table. They're on the menu of traditional finance as the major banks are entering the crypto market and slowly eating those companies up. And unless they go back to the drawing board, even DeFi, and start building new products, new opportunities, new services, the times are going to be really gloomy. So I believe that using AI as a tool to bring new products to the market is absolutely crucial right now.
So I think that RWA cannot work, of course, without infrastructure and AI, and they go together for sure. But I think what's most important is at some point, infrastructure and whatever tech we can think of need to be invisible, and we need like this text to be transparent, not anymore a matter of discussion, and then only we'll be able to have like mass market adoption and things like that. When you think about it, if you buy stocks on NASDAQ, you never think about the infrastructure. So we are at a point where we're building the infrastructure, so it's a topic of discussion, but until and unless this becomes fully transparent and we don't even think about it, I think we can't have like real adoption. So for us at OneAsset, we think that it all starts with the product. And if we have a good product, good yield, good property appreciation, good whatever, then the rest should be transparent for the investors.
Yeah, it's a 3-step journey. So at first, you start with the infrastructure, blockchain, you bring programmability. Second, you bring RWA. For example, a tokenized money market funds, and by bringing it on-chain, you can use this programmability, but to do so, and for that to make sense, these tokenized assets should be native. It should only live on the blockchain, and it should move 24/7, also with the legal ownership. It's not just the token that moves, it's also the legal ownership that moves with the token. So now when we've got the infrastructure, the token and the RWA that can move on-chain natively, at that point, you can bring AI and improve everything around, servicing, automation, reporting, and that's where you have the full product that is now ready to be distributed.
Yeah, I guess the way we're looking at it, right? So I actually sit on the venture side of things, right? So like when you look at RWA assets like moving on-chain, what we are seeing is there are some companies that are just tokenizing for the sake of tokenizing, right? So if you tokenize and you cannot do anything with the tokenized assets, then what for tokenize, right? So a lot of the times, like you want to tokenize because you want to access DeFi, other DeFi protocols out there in the ecosystem, be it like whether you want to increase the leverage, right, via like Pendle, or whether you want to tranche the risk via protocols like Strata, right? So you want to bring these tokenized assets on-chain to access the broader ecosystem, right? So that's the way we're looking at the whole tokenization space. In terms of AI, yeah, you see a lot of developments there, and I think generally people are moving towards the consensus that stable coins will be the means of transfer for AI agents out there, right? So in terms of, you look at agentic commerce, agentic payments, there's a lot of attention in those spaces because everyone realizes that it's easier to spin up a wallet for agents. It's easier to set permissions for these wallets for agents. And that is why, yeah, you see so much attention on stable coins and agentic commerce involving the crypto space.
I think if I want to just pick up on what Lionel and Rafael said, I think that there's some interesting elements that I would like to also add on and emphasize. So the gentleman spoke about the real tokenization. And we've been hearing about tokenization now for years, and a lot of smart people have been spending a lot of time on the panels talking about it. But if you look at the actual scale of tokenization globally that we are right now on permissionless platforms and blockchains, 30 billion, 40 billion if we take out the stable coins, it's 0.0% of the global equity markets, right? It's still nothing, but we keep on talking about it. And the most products that we see in the market, and great products, and you know, Bybit, Robinhood, Kraken, they're all building it. It's usually the wrapper derivatives. So you're told like you feel like you're holding the stock, but actually it's the exposure to the price movement. Whilst the true tokenization, the ultimate, the holy grail there is that where you hold the stock, which allows you to vote, to get dividends, to have the full ownership. And this is something that we really need to have if we want to scale the mass markets. So the true tokenization elements, including the money market funds, exchange trade funds, but especially stocks, we need to have the full true ownership and look at what type of blockchain, the settlement, the clearing system, the infrastructure would support it. So there's still a long way to go. We've been talking a lot about it, but I think in essence to implement the true tokenization in addition to the currently deployed products, which are, I think, are great products, but for the scale, we need more.
And I'd like just to add something. I think that's because the industry has too much been focused on finding new customer. So they want to access blockchain because they think there are a lot of on-chain user, and now they want to access their money. While the idea of blockchain and how Franklin Templeton sees it is how you can improve the solution you already provide to all your customer. And by improving this solution using the blockchain, you first bring new customer that you have already on-chain with better products, so they stay with you because you improve all the life cycle. And at the same time, you will also access new customers that are already using the blockchain, and that's where, let's say, the first comer and the one that's builds the whole innovation also that is happening on-chain.
Yeah, I think they're great points, and maybe just to offer like the DeFi point of view on some of these topics. So at RE7, I spend a ton of time thinking about how we can make RWAs composable with our partner chains and clients. And we really see some of the scaling issues that RWAs have. So if any of you are familiar with like how lending markets work and how an extend credit, liquidity profiles for all of these RWAs are very important, and it's a topic which there's a fair few teams right now solving for. I think AI is really serving as kind of like the glue between the different kind of DeFi Legos that exist on a chain, and I think that will only continue to mature as time goes on. But maybe a good follow-on question from this, Rafael, to your point, do you feel like RWAs are actually bringing new capital into crypto, or do you feel like it's a lot of the same kind of recycled capital that we currently see on chain, you know, going for the maximum yield while the DeFi yields are currently very compressed?
Well, most of the wrapper, at the end, they're just a worse product than the traditional one. The idea is that it's the best product in the sense that now it has new rails, so it moves better and it can use the programmability. But at the same time, it has one big issue, is that it has usually a lot of counterparty risk, also a lot of fees, and a lot of intermediary. And at that point, yes, the product is better and it improves, let's say, it provides new exposure to the on-chain capital. But at the same time, it's keep the same money. It's the same money that's already on-chain, now can access traditional assets with, let's say, better rails. And that's the point at the moment where we are. At the same time, what I'm seeing now with digital native tokenized money market fund, for example, is that we just miss some building blocks, some connection, and the possibility for traditional treasurers, traditional allocators to access on-chain and to have this access without even thinking that they're on-chain.
Do you feel like these rails will be kind of, like it'll be apparent that you're going onto a protocol, or do you feel like the distribution is really key for getting this external capital on-chain?
I think most of the protocols that have been built on-chain have done something really well, is that now you can access finance without having an intermediary. You can directly access the raw products, and you can do a lot of stuff. But at the same time, intermediaries will still exist, and those intermediaries now have to focus on the added value that they have to provide, because users have access to finance without them. So if they want to stay relevant, they have just to provide added value, but they will stay, and that's where the distribution will come into place, where those maybe also big companies will just use the blockchain as kind of the white label solution, or leverage decentralized platforms to provide a better solution to their already to the customer they have.
Can I try, just for the entertainment purposes, to disagree a little?
Go for it.
Although we are at the stage where a lot of sort of native capital is moving between one hands and B2B, but we see a lot of new institutional capital coming in, as mentioned, the money market funds, exchange traded funds that I mentioned, the tokenization that we see, especially in US. We see pension funds coming in and betting real hard fiat on and putting it on chain. So we see a lot of new capital coming in. Nevertheless, this is not at scale that everybody has expected and has been talking for some time. So things that we still need to do and make sure that there's a real economic use, there's a proper settlement and clearing system that removes the counterparty risk that often is embedded. Have a look at the layers, additionals that are put in place that also make create additional risks. So I think that there's still plenty of things that need to be done, but at the scale that right now many different jurisdictions are going, and I've been mentioning US for some time, I think that's going to really impact the markets. And as much as in Europe we'd like to decouple from US politics for many reasons, we have midterms in US, and now we had a Genius Act passed, we have a Clarity Act. If the Clarity Act is passed before the midterms, because after the midterms the House may flip, and that's going to be much more difficult. If that happens, that will significantly impact the markets and the flow of institutional money on chain and through the tokenization platforms. So I think that that's going to really impact, and we'll see a lot of new capital on buying RWAs in the future.
Yeah, I guess the way I'm looking at it is, like, for these traditional assets to actually, or traditional capital to move on chain, like, why do you need them to move on chain? Like, so I mean, maybe just to set the context, like, for me, the way I see why people want to access assets on chain is because it provides them with access to something that they don't have access to in the traditional world, right? And that's why I say, like, I keep emphasizing interoperability with other DeFi protocols, right? If you just want to invest into a money market fund, you can do it off-chain, right? Like, what's the point of bringing this on-chain if you don't have additional benefits of being on-chain, right? I mean, some benefits can include, like, 24/7 trading, right? And I think some people are doing that. Some are like tokenizing pre-IPO stocks and opening up to the everyday consumer, right? Because the everyday consumer doesn't have access to this. So I think on-chain brings about accessibility benefits, but if you're just tokenizing it and then your traditional capital is flowing into these assets, which can already be accessed off-chain, then and this capital just stays on-chain and just hold on to these assets, then what's the real point of tokenization there? Yeah, that's the question I have.
So I totally agree with you. Like, the first thing we need is better product than off-chain. If the product on-chain are better than off-chain, the TradFi is pragmatic. Whatever will bring them better returns will be more attractive to them. But there is one requirement that everybody's working on, and I'm sure you'll agree with me, is the regulation. Without proper regulation, without clear legal framework, without all of this, we will not be able to attract any of this TradFi money on chain, or it's gonna be just a drop in the ocean of the money.
Yeah.
I couldn't agree more. And that's a very, very important element here. And I understand that for crypto community, speaking about governments is speaking like about dark forest, something not native to what we do and what we feel. But we have to understand that things that the crypto community has built is actually money. And that money has been controlled, supervised, issued, licensed by governments for thousands of years up to date, and will continue to do so for another thousands of years. And when we hear crypto companies complaining about the difficult regulatory environment today, I think many of them don't realize how easy it is to do business now compared to what it will be in the future. And we'll remember these days like a honeymoon days with zero regulation, because the amount of new laws that are coming in place to supervise stablecoins, for example, is just incredible. And we have to realize about it. And it's great when I see some big corporations like Ripple, we here see in the audience, they're moving, getting license after license in EU and globally, making sure that the products that they build, they're fully compliant. And that compliance is needed to build trust between the institutions. So I fully agree that the regulatory framework is absolutely key here.
Where do you feel like the clarity is starting to emerge at the moment? And how do you feel like that's going to shape the capital that comes on chain in the future?
The US clarity? Basically, well, one of the most important things is the momentum. So we've seen with this US administration building momentum, specifically with different exchanges, with the stable coins, and we know that differently from EU, US has the political agenda behind stable coins, dollarizing different emerging markets, and they're doing very successfully. Number two is they are reducing their cost of treasuries by requiring the issuers of stable coins to buy treasuries. So they're reducing the cost of debt, and they're doing it really smartly, and it's happening for them right now. So if they put in the Clarity Act, which is not directly connected with the stable coins, but builds a lot of framework around it, I think that will give a much more certainty to the global capital markets and give a direction for the governments globally where this is going. So I believe that Clarity Act is going to be a very key moment for the dynamics of the crypto markets globally. And if that doesn't happen, everybody will be looking at Europe. So what does Europe do? And I'll throw a few words here, acronyms. So markets and crypto assets, everybody has it now, but it's yesterday news. You need electronic money license to do business. You need MiFID, markets in financial directives, like a brokerage license to do business. You may even go for the multilateral trading facility license. So a lot of licensing there's in place, and Europe is the next one leading. So we need much more clarity and much more ambition. Europe has the competence, but does it have the ambition to lead? That's still a big question.
Yeah, I think they're good points, and I think a key takeaway from a couple of the conversations we've just been having is that there'll be more RWAs that are popping up on chain going forward. I'd like to hear this from all the panelists, actually. Not financial advice, but kind of advice. What would you suggest to the audience when they're assessing some of these RWA opportunities? Do you feel like it is just going to be exit liquidity, and how do you feel like they can price some of the risk that they're taking efficiently?
Yeah, happy to take it. So basically, as I mentioned before, so there are very different types of tokenized assets, and if we talk about real world assets. So what we see right now, and many retail users don't really see much difference whether they own the exposure to the price movements or they actually own the asset. So for them, there's not much difference in how they see it. But I think that for institutions, it is really important. Is there additional layer of counterparty risk in acquiring a particular tokenized asset, money market fund, exchange traded fund, or a particular stock, because they can go and buy the money market fund, as we heard, themselves and TradFi plays. So if they go on chain and buy it, is there additional layer of risk involved and the counterparty risk. And I feel that that will be an important differentiator. And if we're able to do it without additional counterparty risk, ensuring that you own the asset, you're able to vote on it, for example, with stocks, you can get dividends out of it, then it's the true tokenization, then it's the true asset, and this is where the more trust I feel that will be coming into the market in the next year.
So I think, again, not financial advice, but we should divide RWAs into categories. RWAs was built-in yield, call it whatever you want, dividends, rent, whatever, and the one without. I think the one that are here to stay are all the RWAs was a built-in yield system. That's a clear yield that we know where it's coming from and everything. And in this one, the second step to find a good RWA product is to look at the liquidity. Because I think owning tokens is a good thing. Being able to sell them is a much better thing. So at some point, the liquidity and the exit path that we'll have, I think is the second most important thing. And for the not financial advice, yeah, for sure, we need to understand better as crypto natives the risks. The downgrade is not in the market anymore because of the market structure and the market regime and everything. It will come back. People will take an amount of risk that's ridiculous for the amount of profits they can make. And we need to assess the risk at any point when investing.
I'd like to come back on the money market fund use cases. So indeed, when you think about it, money market fund is the most boring thing. Usually you buy it, you hold it, and then you sell it because you've got to do a settlement or payments. So what's the point of bringing this asset on-chain? And that's where you can see the point is really how you can unlock capital for those institutions. If now, instead of just having the opportunity to buy it, and it takes 1-2 days before receiving your money market funds, then you have to sell it, you lose also 1 or 2 days of yields, and then you have to make a payment, and sometimes your counterparty that received this payment, well, will also buy your money market funds. So what can we do with that now? Well, by tokenizing this money market fund now, you can send it 24/7. So a stakeholder that has capital and that has liquidity and that use money market fund as the foundation of any investment and the foundation of any treasury that you can find on your balance sheet. If this asset now is more flexible, it can move 24/7, or you can increase your allocation into this yield-bearing assets, and you can also use it for settlements. If you've got to pay a partner, well, you will send him directly these money market funds. And in addition to that, to just send an asset, the assets, by being on-chain, can accrue the yields intraday, which means that now a corporate that needs to do a settlement with a partner because of the supply of goods will send the money market fund at 12, and at the instance where the partner will receive the money market fund, it will start accruing yields. And these yields, the fact that the yields is also 24/7, as well as the legal ownership, make it a much more efficient product. And when you think of it, if now you've got something that is already more efficient, you can allocate more cash, you have more yield-bearing asset, you can also go further down the risk curve and then use it also as collateral. And that's where also we can use blockchain and DeFi protocol like Pendle, Aave, Morpho, and all the great DeFi protocols to just improve the use cases as well as improve the composability of those assets.
Yeah, I guess just touching a bit on the yield side of things, right? What you're seeing on-chain is a heavy yield compression, right? So you see your general lending rates being close to your T-bill rates, right? So generally, I mean, in this stage of the market, when the market is in like a bull market, usually what you're seeing in the traditional, I mean, on the crypto yield markets is that there will be a spike in the crypto yield, right? But right now we are in a stage of the market in which like everything is converging towards T-bills. And so what happens is that a lot of, let's say, your market neutral funds in the crypto space will be seeking a lot of higher yield opportunities. And that is where a lot of them are turning into RWAs, because RWAs are the ones that potentially offer a lot higher yield, but then it comes to about like risk assessment on the yield opportunities. So I mean, on the venture side, we are seeing a lot more RWAs being brought on chain. You see like trade financing being brought on chain. You see receivables financing brought on chain. Some projects are like tokenizing STRC, which is giving like 11.5% APY, right? And then I guess you need to make the assessment on the risk profile of all these assets, right? As well as the issuer of these assets and what kind of assets are they willing to sell to bring on-chain versus what kind of assets they are keeping to themselves, right? And the quality of the collateral backing all these assets. So I think there's a lot of discernment that is required in assessing the risk.
Yep. Okay, thank you for that, guys. And moving on, do we feel like TradFi is here to dominate? Obviously, we've got a panel of giants. Or do you feel like smaller shops are still competitive? And what edge do you feel like each one has over the other one?
Well, if we take 7 years back and look at Binance and Bybit and the largest exchanges, they were all small early startups. And so we look in another 7 years, I hope that we'll see many more companies like that. But what made these companies bigger, what they are right now, is not enough to carry them for another 5 years. And let me tell you a quick story, a sad story with a happy ending. So almost a year ago, our CEO got a call from CFO saying, look, Ethereum is gone. How much of it? All. And they calculated, what's it in dollar terms? It's 1.5 billion. We used our company assets to replenish it. No single investor suffered. So we lost 1.5 billion last year. And even with that loss, it was still the most profitable, the best year on record. And I'm saying that not because to say that what a great Bybit company is, but saying that Bybit realized this, despite the fact how successful we have been so far, we need to build new products and new services to keep on growing. And this is what I've been saying before, that many original crypto companies, they've been saying they'll be disrupting traditional finance, they'll be bringing new things, but in reality, many of them are still just trying to sell Bitcoin. And it amazes me how many super smart people are still trying to find a new narrative to explain, where the Bitcoin is going. The Bitcoin is going to find its way up. It's like Mona Lisa. It's great without talking about it. What we need to focus is on building new products, new opportunities. So Bybit is building the new One Financial platform where you have one IBAN, a card linked to it. You can invest money, save money, transfer money. You can build your wealth management. So building new products, to my understanding, is absolutely key if you want to be successful in the next stage. Going back to the drawing board, going back to the original roots of crypto and bring new opportunities. And I think that this is absolutely important.
Yeah, as now we've got access to finance really easily via the blockchain, all those businesses, whether big or let's say medium or small businesses, they will just leverage blockchain to improve their products. And that's where we will see blockchain and protocols, decentralized protocols used as white label and just leveraged by companies like Bybit, Binance, and also traditional asset manager like Franklin Templeton use and bring their product and their solution on top of decentralized finance to just not improve a product alone, but to bring a unique solution to customer.
Yeah, the way I look at this is, small shops always have the benefit of speed, right? Like for your bigger shops, there are more considerations because you already have a brand name, you have a reputation out there, you want to maintain the reputation, right? So smaller shops don't have that requirement to take into account these considerations. They are allowed to move a lot faster. Even if you just look at Hyperliquid, right? They rose up in the last 2 years. Now they are 6% of the entire centralized exchange volumes. The speed of growth is really fast, and they are shipping all this with a team of 11 people. So you see the speed in which small shops can ship because they do not, and a lot of them, especially when there's regulatory gray areas, a lot of the bigger shops tend to take a more conservative approach, while the smaller shops are just out there shipping, right? They are just we will do this first and we'll apologize later. By the time we have to apologize, we will be big enough to apologize, right? So that's the benefit that small shops have. The benefit that big shops have is obviously the brand name, right? So when institutions want to deal with a counterparty, they will deal with the bigger shops because there's the decision makers in these big institutions often need a reason to justify why they are making such a decision, right? And with the brand name, it's easy to justify. Yeah, I'm investing in this because the big players are all doing so, right? So it's a lot easier for them to make a decision, and therefore, yeah, the bigger shops have that security there.
So for me, I've been in VC for the past 15 years, so I'm an innovative and innovator enthusiastic, and I think that the most important is not big shop, small shop, is what speed of innovation and how much they're willing to innovate. And if the small shops are starting from a blank page and without legacy, it's a huge advantage. Of course, the big shops have the capital and the ability to hire the best, pay the best regulation or whatever. But end of the day, I think the innovation will be the most important thing, whether you're big or small. And I think in our industry, we can make a super simple thing is go to see your traditional banker and tell him what we want to do, and we will most probably laugh a lot. Just go to your banker with your title deed from your apartment and tell him, can I borrow 60% of the value of this asset, but just for 30 seconds? I'll give you back after. Probably will laugh. And that's the kind of thing we can do on chain, and that's what the kind of thing innovators in the industry will probably build product for.
That's great. So just in the interest of the time, just in short, I would love to hear from each panelist what's one thing you're very excited on going forward in the future, and what's one thing that you would like to see maybe this time next year.
Well, I'm excited because now blockchain is accepted. Like we don't just speak about blockchain, we speak about new products coming on chain, new businesses coming on chain, and just new solution. So what is really exciting is just the adoption of blockchain is here. We all understand the advantage of it, and now it's just the building blocks that will just bring the true products and the users on top of that solution. So I'm excited because I feel that we're at inflection points, and that's where we will just connect every dot, and we will see capital moving on blockchain, user moving on chain, products, app, and users using solution without even knowing that the blockchain is just the backbone of it.
So what excites me is crypto bros are not anymore the weirdos in the room, and that's kind of fun, but it's fucking cool. What I want to see more next year is more companies that have gone through the regulation way, more clarity on regulation, more clarity on all the legal framework that we will be using in the future. I think that's the main key, and so I hope most of the company in the space will go that way.
I'm a former lawmaker, and in my previous days, when the businessman used to come and say that would like to have this one or other particular law changed, you would in your mind automatically think to do it exactly the opposite. But if you would come to an event like this and you would see like 1,000 people excited about a particular idea, you would feel that there's actually something meaningful behind it. And I always felt that these community gatherings, these ecosystem build-ups have actually real meaningful value on what an impact on what is happening both at the regulatory and institutional level. So my wish so that we don't underestimate of these meetups that we have here today. I think they have real impact. And the number two, what I would like to see going forward, much more collaboration. We're often, as a crypto community, we feel that governments don't understand us, and governments, they don't understand us. But we also sometimes don't understand the governments themselves. So a little bit of more collaboration, I believe, with institutions, with the governments, and keep building these crypto communities. I think that this is something that really excites us as a global company, because we believe that really makes the change. We try to support these community build-ups. And we feel that there's much more collaboration in the future as the governments, institutions, authorities grow to learn about crypto, about the blockchain, about the products and opportunities that it brings.
Yeah, for me, it's the continued maturation of the prediction market space, right? And yeah, I mean, we're still in the early stages of where prediction markets ought to be. Right now, it's a lot of like speculation on the various different markets. You see the main growth areas being in the sports betting side of things, right? But I want to see like the prediction market space improving and maturing in the sense that it's an actual financial product that institutions will actually use to hedge out risks or express certain opinions on macro issues, right? Because if you think about prediction markets positions, it's actually the purest way to express or hedge out risk in specific areas, right? For example, like who will win the next elections? If you hold a view that, let's say so and so, you want to hedge out the risk that a party wins. You can express that view on the prediction market as a direct exposure to it, right? Instead of like having to hedge out maybe stocks that are correlated to a certain particular person, right? So I think it offers up this like opportunity for direct expression, which I think it's not there yet, given the liquidity in the markets, but I hope we reach there. Yeah.
I think HIP4 will solve some of that.
Yeah, I'm bullish that. Yeah.
Yeah, sorry. Yeah, thank you very much. Thank you to the wonderful panelists for today. It's been a whole lot of fun. I'll hand you back over. And yeah, thank you everybody for coming.